What is the difference between a New Year resolution and a goal, and which one is better? Hello, folks. My name is Neil, and today we are going to talk about psychology and its importance when it comes to investing. On 1st January or on 31st December, friends would have definitely asked you what your New Year resolutions are. When they ask me, I say, I don't have New Year resolutions, but I do have goals. What's the difference? Well, let's say that you have a New Year resolution that you are going to go out running every day, or at least every weekday of the year. So the New Year starts and you go out the first day and the second day, the third day, and 10 days, 15 days, whatever. Different people have different capabilities. But ultimately, you're going to hit a weekend in which you got drunk or you stayed up late or went out on a party or what have you, or you fall ill, if you're extremely disciplined, and you're not able to go out running that day. What happens inside your mind? You start thinking, oh my God, I've already broken my New Year resolution. It's not even 1 month or 2 months or whatever. And when that happens, you feel demotivated. You don't feel like going out again, because you've already broken the New Year resolution. Maybe you are extremely disciplined and you have a strong willpower and you get back onto your resolution of running every day. But then you're going to hit a snag again and then again. And every time you hit a snag, you get demotivated. You feel um, you don't want to go out anymore. But what happens with goals? Let's do a quick calculation in our heads. Let's say you decide you'll run 5 kilometers um, every weekday, which is 5 days a week, so about 25 kilometers. Um, and then, so that makes it about 100 kilometers in a month, um, which makes it 1,200 kilometers in a year. So let's say that you set a goal that you are going to run 1,200 kilometers in the year 2021 or 2022, or whichever is the year that you set the goal for. What happens when you hit a snag? Because you're still the same person. You are still going to go out drinking and stay up late, and sometimes you'll fall ill and what have you. So let's say that you've done 75 kilometers in the first week. Yeah? 75 kilometers in the first month. 3 weeks have gone by. You were disciplined. You went out every single weekday. And on a weekend, in the third week, uh, uh, you hit a snag. And on Monday of the fourth week, you could not go out running. So now you're 5 kilometers behind. Well, just 5 kilometers behind. It's 1,200 kilometers in a year, and you're just 5 kilometers behind. What this is going to do in your mind is it's going to psychologically motivate you to get back on track because you've not really broken anything. You're just a little bit behind, and that's okay. So the next day, what do? You run 6 kilometers, 1 kilometer extra. And then on Wednesday, you run another one extra, which is 6 kilometers. And then 6 again on Thursday and 6 again on Friday. So 4 kilometers out of the 5 kilometers that you were behind, you've already caught up. So by the end of the month, instead of 100 kilometers, you are at 99. And maybe if you're motivated enough, you'll go out running on a Saturday and probably do a few kilometers extra, you know. And that way you would probably end up doing 102 or 104 kilometers. The idea is keep your eye on the goal, keep your eye on the long-term vision that you have. And I think not only will you be able to achieve it, every time you hit a snag, you'll be in your mind, you will be motivated to do a little bit more and meet your target or probably exceed expectations. Now let's take this psychology and go into investing, right? Um, let's say that you set up a trade that you're going to buy a particular stock at 100 rupees, and you expect the stock to go up, right? So your target is to sell it at 115. But then you have a stop loss at, I don't know, 93, right? If it hits 93, you're going to get out of the trade. And the stock does not go up. You hit a snag, right? The stock goes down. It goes to 99, 98, 97. Now you're 7 rupees down on the stock, right? And it hits 93, which is your stop loss. Now, if you're doing intraday trading or if you're doing long-term investing, then you don't have automated stop losses. Automated stop losses are only on big trade, which is intraday. So what do? Right? Majority of the novice investors, what they will do is they will buy that stock more and average out the price to somewhere around 96 or 97. Is that a good idea? What if the price continues to fall from 93 to 90 and then 89? You buy more and then some more. Now let's say that the stock that you're investing in is a really, really good stock, right? And in the long term, in 5 years, 10 years, eventually you will end up making money. There's no doubt about it. But what's better? Getting out of the trade when the stop loss hits, or keep averaging it out? Because what I'm trying to explain is when you average out a particular stock by buying more of it, what you end up doing is you block money in a loss-making stock. Yeah. So first you were, let's say, 1 lakh rupees invested in a stock, and then you average it out by blocking 1 more lakh rupees and waiting for the stock to come up. Now this 1 lakh rupees could actually have gone into another stock that is actually rising and making you money. But no, what you've done is to try to save the money that you are losing on a particular stock. You're blocking more money. So the money is not really working for you. What you're really doing is you are working for a loss-making stock. So that's never a good idea. Now, but psychologically, how do you beat your mind? This entire session is about the mind. How do you beat your mind? Not taking the stop loss and averaging out a particular trade is like the New Year resolution. When you fail, it demotivates you. It demoralizes you uh, uh, to not do it again or to average it out. You don't want to take the stop loss. You don't want to accept the loss because you've lost 7 rupees. You're looking at 7 rupees. But if you put 1 more lakh rupees in it and it goes down further, you're losing more money, but you're not looking at that. You're trying to average it out more and more. So don't look at it like that. Like in running, you have a goal of 1,200 kilometers for the whole year. Maybe you could have monthly targets on your investments. If you're trading, this is specifically applicable to trading. You could have monthly targets. And this is really, really advantageous when it comes to FNO, futures and options. And I haven't really started talking about futures and options on this channel, and which I will be. But it's particularly applicable when you're trading FNO or stocks. Let's say that you've lost some money. If you hit stop loss and if you get out of that trade, you've lost 7 rupees, but that's okay. That's just 7 rupees that you can very easily cover up. Take that money, put it into a stock that might make money for you. So there's a 50-50% chance that you'll make money on another stock. But the stock that you're losing money on, there's 100% chance that you're going to lose it, because the stock, you bought it at 100 rupees, then it went down to 93, then you bought some more, so you averaged it up to 97, but you're still making a loss, and you're still waiting and your money is still blocked. And then let's assume worst case scenario, it goes down further, and then you block more money and you're making more loss. But let's say that you take out that 1 lakh rupees, or let's say not 1,93,000 rupees, and you invest it in another stock, right? And let's say that stock goes up, because you won't be making losses in your every single trade, and there are techniques and tools and indicators that you can use to increase your probability of making money. Of course, people do have bad days. Sometimes they just keep making losses for a long period of time, but that rarely happens. If you're using the indicators and if you're watching the market carefully and if you're making sure that the fundamental is good, the probability of you making a loss is lower than the probability of you making a profit. Um, Stocks are, you know, they have a bad name. People say that when you invest in equity, it's very risky and you lose money. But look at the markets. Look at what you see on the small screen down there. That's the Nifty, and it's been rising for a while. Sure, there are down times, you'll see. But if you look at 20 years of data, the market has only gone up. So the probability of you making money of the stock market is at least 50%, if not more, right? So, think of the monthly goal. Let's say that you've decided you'll make 1 lakh rupees a month, you know. Let's say that you'll make 5% of your total investment per month. right? Even if you do make a loss in one of the trades, that's okay. That's easy to cover up if you're keeping an eye on the 5% per month. Let's say that you take, I don't know, 10 to 15 trades in the month. Let's say 3 or 4 do make a loss. That's okay. If you hit the stop loss, you get out of the trade, put into a money-making trade, there's a very high chance that you'll meet your 5% per month or whatever your goal is easily. But if you keep blocking your money in a loss-making trade, I can assure you there's a much lower probability that you'll meet your monthly target. So, to sum it up, the psychology is don't look at each and every single trade. It's good if you make money, but sometimes when you don't, if you look at that trade in isolation, it'll make you feel bad, it'll demotivate you, and you'll not hit that stop loss, you'll not get out of that trade. Keep your eye on the larger goal. Have monthly targets and focus on that. And when you do hit a stop loss, please get out. Whether you are a long-term investor, swing trader, or an intraday trader, get out at stop loss. That's all I have for you today, folks. I hope you're having fun, and I hope we make a ton of money off the stock markets. Have fun.